Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is February 24th. Quickly wrapping up another month here. A week left in February and on to March we go. We are going to take a look at Hermes Paris, or Hermes, maybe is how you pronounce it, Hermes Paris. This is a company out of the consumer discretionary sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you can find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day, run it through my screener, and see if it makes it onto my watch list. There's also the thanks button down below for anyone who might want to buy me a cup of coffee. Really appreciate all the subscribers and the viewers of the channel. You guys and gals are awesome. The channel continues to grow because of people like you, and thank you for taking the time to do that. It doesn't take you but a couple of seconds, but doing all of that does really help out the channel with the YouTube algorithms there. This is the Vested Interest Stock Screener. This is how we will be running through the video here, looking at this criteria. We will see how it shakes out in the end. It must meet 5 of 8 to make it onto my watch list. If it was a company out of the financial sector like a bank or an insurance company, then we would add in price to book. You can use price to book for any company, just don't blindly use one as fair value. That's really for banks and, like I said, other financial companies like insurance companies. Now back to Hermes. I believe it's Hermes, www.hermes.com. Hermes, whichever, www.hermes.com. That's www.hermes.com. That is their homepage where I pull this information from. And this really is a company similar to like a Louis Vuitton. You know, they're a high-end retailer of a lot of different goods. Here you can see women's shoes, hats and gloves, luggage, baby gifts, men's shoes, men's silk, fashion accessories, a lot of leather goods, men's ready to wear. I think they have their hands in some watches and some perfumes and stuff too. You know, they're an artisan craft maker. Since 1837, Hermes has remained faithful to its artisan model and its human values: the freedom to create, the constant quest for beautiful materials, and the transmission of exceptional know-how which enable the creation of useful and elegant objects which stand the test of time. Forged the uniqueness of Hermes. Hermes, however you pronounce it there. Family run, independent, and socially responsible, the company is committed to maintaining the majority of its production in France, so it is a foreign company, through its 60 production and training sites while developing its international distribution network of 294 stores in 45 countries, right? So they're making the products in France and then shipping them out to their stores to be able to sell them, looks like worldwide. Now, the reason we are looking at Hermes International Society in Commandite Para Actions, probably butchering that, ticker HESAY there. This is out of the consumer discretionary sector. Closed out the day at $284.18, and the reason we're looking at them down 2.34% on the day. I have seen a lot of people cover like Louis Vuitton, but I have not really seen this particular company covered, so I thought we'd take a look at it. I'm also looking for something in the consumer discretionary sector. 52-week range as low as $206.66, as high as $303. It is not within 15% of a 52-week low. It needed to drop to below 237, I believe, whenever I did the math, 237 and some change. But if it was below that, it would obviously be within 15% of a 52-week low. Market cap of 297.929 billion, a beta of 0.75, so less volatile than the overall market. PE ratio seems extremely elevated, $62.05, so definitely would want more of a pullback here, in my opinion. I don't know that a consumer discretionary company that deals in high-end goods is, worth a price-earnings ratio that good, but maybe they're growing that fast. Maybe there's that many rich people buying stuff like that. EPS, earnings per share, is $4.58 per share. Earnings date, February 14th, so last week, or was it the week before now, their earnings date. You can go back and check that out if you want to know more about it. Forward dividend is $1.61. Now, they are a semi-annual payer. They pay 2 times a year is what it looked like. We'll see that here towards the end of the video. Looks like their current dividend yield is 0.55%. Ex-dividend date, February 25th, so you would have had to buy them today to be in line, or before, or own them before today, to be in line for the next dividend. So if you were to buy them tomorrow or going forward, you won't get the next dividend. You'll have to wait a few months, or several months actually. Like I said, they only do pay out twice a year is what it looked like when I looked at this. We'll see that here in a little bit. 1 year target estimate, at least according to Yahoo Finance, $312.50. So they do see some upside as far as price appreciation as far as Yahoo Finance is concerned. I am not affiliated with Yahoo Finance, just one source I go to for information. Now, I like to look at dividend yield theory to see if there's potentially any undervaluation. Quick reference check that I use. And to do that, we look at their 5-year dividend yield average of 0.58%. We compare it to their current 0.55, or over here where it says forward, same number, 0.55. And since it is lower than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory, and only slightly. Really, you can almost call it fair valued. It's slightly, ever so slightly undervalued, again, at least according to dividend yield theory. Now, they say their payout ratio is 34.27%, so that is well below the 75% or lower that I look for. And free cash flow, I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, they can pay dividends, which this company does, and they can raise those dividends over time, which is what I want as a dividend growth investor. Now, December 2021 here, you can see $3.4 billion in free cash flow. 2022 was at 4.18, 2023 up to 4.3, and 2024 up to 5.1. So you can see nice, steady free cash flow growth. Repurchase of shares, they are also pulling shares out of the market. Looks like 158 million in 2021, 123 million in 2022, 23, 130 million, and 24 they were actually down slightly, only 37 million. So I do like that their free cash flow is steadily growing. I also like that they're pulling shares out of the market. Now, this is where we get to a little bit of the information not being provided because it is a foreign company. A lot of times I see this with foreign companies. So we didn't have a forecast. We didn't have EPS listed or revenue growth listed either, which is just an extra I throw in here. So we can't look at that. But they did list out return on equity and return on invested capital, which are two metrics that I like to look at. I like over 10% for both of these. And return on equity is at 28.47%, so above the 10% I'm looking for there. And return on invested capital at 20.9%, above the 10% I'm looking for there as well. And again, we can't look at EPS because they did not have a forecast listed. Now let's look at their history here. Frequency payout, they're saying NA, but looking at it, it looks like just twice a month, right? Here's 2020, they paid out in April and June. 2021, April and June. 2022, March and May. 23 was June and May, and 24 was October and May. So again, looks like they're paying out twice. I don't know why that's February 20th and then paid out on October 10th. That's weird. But it looks like anyway they pay. Maybe that's a typo. Maybe that should have been February and May. But either way, it looks like they pay out a couple times a year. So I'm going to look at this. They're saying 34.65% payout ratio, so well under the 75% I look for there. And they're also saying nice dividend growth at 94.09%. Now, this might be a little bit misleading because I believe that is this growth here that they're accounting for. But if you look at it, what I'm doing is looking at their first payout compared to their next payout the next year. So 11 cents in April, and then it was about 11 cents again in April. June, the second payment was 24 cents, and then it was up to 25 cents the following year. Then it jumped up to 18 cents from 10 cents, or almost 11 cents to 18 cents, and then from 25 cents to 43 cents. And then from that 18 cents went up to 25 cents, and that 43 went to 83. Then that 25 went to 26, and that 83 went to $1.85, which was a big jump up. So I don't know that I agree with that it's growing 94%. It does look like they're growing the dividend over time, and that's how I'm looking at it, right? The first payout per year I'm comparing to the first payout per year, and then I'm comparing the second payout compared to the second payout. And it does look like they grow it. I'm just questioning whether it's 94.09%. And if it is, that is extremely, extremely high dividend growth for you. Dividend growth investors out there, this is the type of dividend growth I would love to see. I don't know that it's maintainable or it's just a one-off because, like I said, I believe they're counting this payout raise from here to here as the 94.09%. I'd have to do the math. Or maybe they're looking at it 2 years. I don't know. I'd have to do the math and see where they're getting this from, but it seems very, very high. But they are growing the dividend, it looks like to me. All right, let's run the screener on Hermes. Hermes. Someone pronounce it down in the comment section below, maybe like they do in a dictionary where they kind of sound it out, so to speak. Hermes. Hermes. This is the company we're looking at. Again, I'm probably butchering that, but I don't speak French, so understand the business. That's where we started. Again, they're a luxury brand. They have their hand in a lot of different artisan, crafty type luxury brands, from apparel to, like I said, watches, leather goods, shoes, and flip flops. It look like so. They're a retailer, right? They sell in 45 different countries their products, but they're high end luxury brand, right? So they're like a Louis Vuitton, is what it seems like to me. Growing free cash flow, yes, growing free cash flow over the last 4 years, really like seeing that. Growing dividend, I do say the dividend is growing. Dividend payout ratio is under 75%, right? It's down in the 30% range, so it gives them a lot of room to increase that. Dividend yield theory says they're slightly, I mean, just ever so slightly undervalued. So I did put that in there. If you wanted to say fair value and take that one away, that's fine. It is not within 15% of a 52-week low. The return on invested capital and return on equity were both well over 10%, over 20%, both of them. They did not have earnings per share growth listed. So we're looking at 1, 2, 3, 4, 5, 6 of 8. This one is going on to my watch list. I'm going to do more of a deep dive into this one. I do like the company. I'd love it to pull back further. I really love the free cash flow growth. When I looked at it, I believe they had a lot of cash on hand, but I have not done a deep dive into this one. It is going to go on my watch list, and one I am going to look at. Hermes, however you pronounce that, International is the company. They are out of Paris, and they are out of the consumer discretionary sector. All right, let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it down in the comment section. If you have any other questions, go ahead and drop them down there as well, and I'll try to get to them whenever I have an opportunity. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.